Okay, so first, thank you all for doing this, and I hope everyone's loved ones are safe during this COVID crisis, staying healthy, and I want to thank you for the work you do in drawing attention to a fair tax system. There's no doubt we're facing the most severe public health crisis in 100 years, the most severe economic crisis in 75 years. We all know 222,000 now Americans have lost their lives. Unemployment has reached the highest level in modern history. 3 million Americans are relying on some kind of unemployment assistance. And 100,000 small businesses have closed their doors permanently. I feel that. My dad was a small businessman, and I know how much they struggle. He's sort of a funny guy. He was an exterminator. He had this little exterminating business, and he says, "I'm 97. DDT couldn't have been too bad." But in any case, thank God he's doing well. So we tried to meet the occasion, we Democrats, and I pushed very hard. I was one of the main authors of the CARES Act, which provides $2 trillion in critical assistance for workers, for families, for people, small businesses. We secured, one of the things I'm proudest of was the $600 unemployment insurance, the enhanced unemployment benefits. Not only was it $600, but it went to all kinds of people who had never been covered, gig workers, part-time workers, freelancers, and things like that. So it was much broader. And that that and PPP accounted for more of our economic, the economic bounce back a little bit in the late spring and summer than just about anything else. It also delivered economic assistance, as you know, in terms of cash payments. We had a 50% refundable employee retention tax credit for small businesses. I made sure nonprofits were included in the PPP because so much of our economy is nonprofit, and they give so much help to people who need help. So that was very good. We delivered economic assistance. The direct cash payment, as you know, was refundable. We put in $30 billion for education in New York. We got $1 billion of that, so they didn't have to cut school aid, which was important. But here is the problem with that legislation. Everyone at that time, COVID will be gone by the summer. So much of it was short term. The PPP was 8 weeks. The unemployment insurance expired July 31st. And the economic crisis clearly is not over. Bottom line is very simple. And that is that as long as COVID is still here and we're about to undergo a second wave, we're not going to overcome our economic crisis. And so Nancy Pelosi, we started this time in the House. That's better because it's not controlled by Republicans. But I worked very closely with her, and we put the HEROES Act together. And some of the tax issues that I know you care about, an expansion of the EITC and an expansion of the child tax credit. There's no better way to get money into the pockets of poorer people who are working than the EITC, and the child tax credit is needed for burgeoning families. We also expanded the eligibility of EITC and CTC by making it all refundable, which is very, very important for people of lower income. And we also proposed something which I hope you'll get behind, called the Economic Justice Act. It took took $350 billion out of the $400 billion slush fund for big corporations and put it into investments in community, long-term and immediate investments into communities of color. It would establish a $15,000, for instance, tax credit to expand home ownership in communities of color, new renters tax credit, expanding the low income tax credit, which is vital for building housing for poor people. It's one of the most important things, and it did that. So we did all that. Now we're fighting to get it done. As you've probably seen, the Senate is the barrier. The McConnell Senate is the barrier. There are 20 Republican senators. You may not believe this, but it is true, and McConnell said it himself. 20 Republican senators who say they don't want to spend any money, even though it's the greatest economic crisis since the Depression, the greatest health crisis since the Spanish pandemic flu. One of them said not one thin dime. That's incredible. And so we're fighting to get it done. But as long as McConnell controls the Senate, we won't. If I become majority leader, obviously we'll do this and other things. Let me just finish on the Trump tax cuts. The president's economic agenda, we know, benefited major corporations and the wealthiest of Americans over working class Americans. The 2017 tax bill, the president said each worker would get a $4,000 raise. That hasn't happened. The lion's share of these tax cuts have not gone to middle class families and working families. The tax bill failed to boost business investments that benefit the American people, despite the fact that they said all these tax cuts would cause people to invest. But we all know that the vast majority of it, 56%, went to buybacks. I'd like to get rid of the buybacks. I think buybacks don't put money back into a corporation to invest in its workers, invest in technology, but just puts it in the hand of shareholders. And 80% of the stocks are owned by the 10% wealthiest people. So it's no longer the great equalizer. And so that's the bottom line. Our economy is now in a K-shaped recovery. The people who are recovering best are the wealthiest people. We need to focus on, when the average American looks and says the stock market's gone up while the economy's in trouble, they say something's wrong, and they're right. And the bottom line is we have to focus on working people, on poor people, on getting both in terms of tax policy like the ITC and CTC, and in terms of fiscal policy, in terms of the kinds of things we advocated, change that. If I get to be majority leader, I will. I'll continue to work on that. I thank you. And now I got to make sure the votes, we're trying to delay the Supreme Court as much as possible. We don't have that many tools. McConnell has taken them out of the toolbox, but we're using the ones we have. So thank you for listening, and on to victory in November. Thank you very much.
All right. Thank you so much.
Thank you.
All right, and so now let's jump right into our presentation, and we'll start by meeting the millionaires. Morris.
Hi, my name is Morris Pearl. I have the honor of serving as the chairman of the board of the Patriotic Millionaires. I was originally trained as a computer engineer, but I spent most of my career on Wall Street, the last 10 years at BlackRock, the largest financial management company in the world. And part of my job was figuring out how much of a bailout the banks around the world needed. One day, I was in Athens, Greece at a due diligence meeting. I took a lunch break with a bunch of bankers, and I walked over to the window so people wouldn't see I was taking 2 desserts from the buffet. And I thought for a minute I was watching a parade going down the street, and then I realized something between a protest and a riot moving along. And I turned back to the senior executives of this bank, and I kind of wondered to myself, well, was I doing any good for anyone else besides this bunch of bank executives I was having lunch with that day? A few months later, I left a 30-year career on Wall Street to work full-time doing policy and advocacy work with the Patriotic Millionaires.
Hi, everyone. My name is Chuck Collins, and I'm the great-grandson of the meatpacker Oscar Mayer. My great-grandpa emigrated from Germany in the 1880s with a recipe for sausage and made a substantial fortune. My father used to say, bringing home the bacon had a totally different meaning in our family. Anyway, when I was 26, I inherited a part of that fortune and promptly gave it away. Why did I do that? Because I didn't think it was a good idea to have a society where so few people inherited vast amounts of wealth while millions of other people had nothing. I didn't want to be a beneficiary of that kind of system. I've spent the last 30 years studying wealth and inequality. I've written a couple of books, including a book with Bill Gates Sr. about why we should keep the estate tax, a tax on inherited wealth. I currently direct the program on inequality and the common good at the Institute for Policy Studies, and I'm pleased to be here.
Hi, everyone. I'm Kristen Luck. I grew up poor in a little town in rural Oregon called Elmira. Poor as in receiving government food boxes poor from time to time. Poor as in 6 people in a 2-bedroom house poor. And since I think my father's listening in today, I just want to say I had a super happy childhood regardless. Neither of my parents had college degrees, but I ended up graduating from the University of Oregon. And then this small town girl moved to Los Angeles to try to make it big. And I remember during the interview for my first corporate job in Los Angeles, the CEO asked me how much money I would need to make annually in order to feel like I'd really made it. And I blurted out the biggest number I could ever imagine earning, and that was $55,000. And within a few years, I'd hit my goal before going on to start and sell a succession of companies that would create, if I managed it correctly, a lifetime of financial security. I'm fortunately back in Oregon now, and I work as an investment banker. And as you can imagine, I work with a lot of CEOs every day, including a lot who are even richer than I am. And do you want to know what I've learned from them? Rich people are mostly a bunch of greedy bastards. I'm friends with a lot of them, and frankly, they're not bad people. They've just been advantaged for so long, forgotten what it's like to live like everyone else. Even friends of mine who have inherited money are convinced that somehow they earned it, and they're going to fight to keep every last dime of it. Everyone else in America be damned. Every day, millions of people in this country go to work, they do the right thing, they pay their taxes and try to lead a good life. And every day they're getting screwed by the richest people in America. And it's time we put a stop to it.
The Patriotic Millionaires first came together in 2010 during the lame duck session of Congress when President Obama and Republicans in the Senate were negotiating a deal to extend the Bush tax cuts for incomes over $1 million. Now, here were two allegedly different sides of the political aisle working together to cut taxes on millionaires. And it absolutely infuriated me. And so I called a few millionaires I know, and they got together and wrote a letter to the president of the Congress that basically said, for the good of the country, raise our taxes. And the message was so shocking coming from a bunch of millionaires that it just blew up in the media. And we've been working together to raise taxes on millionaires like our members ever since. Now, to be clear, we are not a partisan group, and taxes are not a partisan issue. The majority of Democrats, the majority of Republicans, and the majority of independents all believe millionaires and billionaires should pay substantially higher taxes. The only people who seem to disagree with this incredibly unremarkable idea are the people running the government. I wonder if it has anything to do with all of those campaign contributions that politicians get from millionaires. Let's think about that. Look, during World War II, the top marginal income tax rate was 94%. Right after, in the Eisenhower years, it was 91%. Today, the top marginal income tax rate is 37%. Who's in charge in Washington has changed countless times over the last 70 years, but the tax rate for the richest people in the country has gone in one direction, down.
Most tax negotiations take place behind closed doors, and in the end, compromise legislation typically gets bipartisan support. So it's been virtually impossible to point to where to blame for where we are today. That changed in 2016 when the Republican Party took over the White House, the Senate, and the House of Representatives. They had so much power, they didn't have to compromise on anything. And in 2017, they used that power to rewrite the entire federal tax code. Every single Democrat voted against the new federal tax code. Almost every Republican voted for it.
This is actually really lucky because it finally gives us some clarity on how at least one side of the political aisle thinks the tax code should be structured. Now, to be clear, some of the bullshit in the tax code has been around for years, but in 2017, Republicans really decided to take full responsibility for it. They voted for it, they should own it. And you might like some of it or hate all of it. That's for you to decide. We just want you to start talking to your lawmakers about taxes because regardless of who's in charge, Americans deserve a fair tax code, and we don't have one.
So y'all, last time, for the first time in history last year, the billionaires in America actually paid a lower effective tax rate than every other group of taxpayers. How does that even happen? Well, let's look at it by comparing a regular person's taxes to a rich person's taxes. Let's begin.
Say that two people, we'll call them Joe and Cammie, work hard. Both worked full-time last year, putting in 40 hours every week. Together, they made $100,000, just above average for a two-earner household. They're married, and they'll file their taxes jointly. So after taking the standard deduction and paying into Social Security and Medicare, they end up with $75,200 in taxable income.
All right, so let's step back here and explain a couple of things. Here you see a chart of the federal tax bracket showing how much you pay at each level of income. This is the chart for married people filing jointly. Single people have a different chart, that kind of thing. So everybody gets a standard deduction. That's the amount that the government says, look, you need all that in order to take care of yourself. You don't pay taxes into the federal government until you make above that amount. We have a progressive federal income tax. So that means you pay a slightly higher percentage of your income in taxes the more money you make. So here you see, after the standard deduction, a married couple filing jointly will pay 10% on the first chunk of their taxable income, 12% on the bit after that, and so on and so forth until they max out at a 37% rate for any income over about $622,000. I want to emphasize two things here. The first one is that everybody pays the same amount as they move through the tax bracket. So a millionaire pays the same amount on their first $50,000 of taxable income as somebody who just makes $50,000 pays on that income. And everybody maxes out at 37%, whether they make $622,000 or if they make $622 million. Morris, you're on mute.
Sorry. Back to the work cards. With $75,200 of income after the standard deduction, the work cards pay 10% on the first chunk and 12% on the rest for a total federal tax bill of around $8,600.
Now, say two other people, we'll call them Ronald and Melanie Slum, sit around all year tanning on a beach. One day, Ronald clicks a button on the couple's E-Trade account and sells some stock, making a profit of $100,000. The Slumps would take the standard deduction and be left with $75,200 of taxable income, just like the work cards. They made the same amount of money, so the Slumps should pay around the same amount of taxes as the work cards, right?
Wrong. Under our current tax system, the Slumps will pay zero in taxes on that income. The work cards worked hard all year trying to get ahead, while the Slumps, who were already rich, sat on the beach drinking strawberry daiquiris. At the end of the year, the work cards are almost $9,000 poorer than the Slumps. Why does this happen?
I'll tell you why. It's because Republican lawmakers who wrote the new federal tax code believe that money should be taxed differently depending on how you make it. Here's a comparison with the rates side by side. Like the work cards, most people, most of you on this call probably, make ordinary income. You work, you make money from that work, you get a paycheck, and taxes come out of that paycheck. Other people, and this is mostly millionaires, make capital gains income. You buy an asset like stock, it goes up in value, you sell it for a profit, the profit is considered a capital gain. As you see, capital gains income is taxed at a much lower rate than ordinary income.
And let's look at another example. Let's say the Slump sold even more stock and made $400,000 in capital gains profit. They take the standard deduction and they pay 0% tax on the first $80,000 and 15% on the rest of their taxable income for a total tax bill of around $44,000. The work cards also had a good year. They got new jobs, made a total of $400,000 too, working 40 hours a week for 50 weeks. They take the standard deduction and they pay into Social Security and they pay into Medicare. At the end of the year, their total federal income tax bill is around $82,000. Again, two families make exactly the same amount of money, but the cocktail sipping, super tan E-traders end the year $38,000 richer than the working people.
So if you actually work for a living, you pay higher taxes than people who live off investments. But that's not even the best deal in the new federal tax code. The best deal is to inherit money like I did.
So let's say the work cards got new jobs, singing full-time for America Sings. They are such good singers that last year America Sings paid them $11 million. They pay their Social Security and their Medicare and took the standard deduction. They ended the year with just under $11 million of taxable income. They pay 10% on the first chunk, 12% on the next chunk, and so on, maxing out at 37% on all the income over around $622,000. The work hard's total tax bill for the year was almost $4 million. Making $11 million a year is hardly reason to sing Cry Me a River. But how does the work hard's tax bill compare with the Slump's tax bill?
Well, The Slumps also had a really, really good year. Mr. Slump's great aunt died and left her entire $11 million estate to the Slumps. Don't worry, they were not close. So how much will the Slumps pay on taxes in their $11 million of inheritance income?
Nothing. Zero. Nada. Neither the aunt's estate nor the Slumps will pay any taxes on that 11 million, because when Republican lawmakers rewrote the tax code, they exempted the first $11 million of wealth from every estate from taxes, and they exempted 22 million of wealth for couples. Once again, the Workharts and the Slumps took in exactly the same amount of pre-tax income, but because they earned their money in different ways, one couple by working and another by waiting for someone to die, the Slumps ended the year $4 million richer than the Workharts.
You may have thought we broke from England and started our own country because we wanted things here to be different, but take a deep dive into our tax code and you'll hear God Save the Queen playing in the background.
Yes, Kristen. The Republican lawmakers who wrote the new federal tax code clearly prefer an aristocracy. Want proof? Remember how the capital gains taxes work? You buy stock for $1 million, you sell it for 10 million, you only pay tax on the $9 million you gained. Simple enough. But what if you bought that stock for $1 million? It grew to be worth 10 million, but the day before you're going to sell it, you died and the stock went to your heirs. In the new federal tax code, when your heirs inherit that stock, poof, the cost basis magically changes. Instead of the basis being $1 million, what you actually paid for the stock, the basis stepped up to 10 million, the value it had on the day that you died. When your heirs sell that stock, they will only pay tax on the gains above the new $10 million value. $9 million of capital gains is totally wiped out for tax purposes.
Another gimmick called the 1031 exchange deserves extra attention as it benefits a certain well-known real estate developer. The new tax code allows investors to avoid capital gains taxes when they sell a piece of property if they immediately invest it in another property. So let's say a developer buys a building worth $10 million, holds it for a few years, and then sells it for $20 million. He rolls that money into a new $20 million building. A few years later, he sells that building for $60 million and buys 1,000 buildings with that $60 million. The developer started off with one $10 million building and ends up with 1,000 buildings worth $60 million and still has paid no taxes.
When these two loopholes work together, millionaires' real estate families can acquire billions of dollars worth of property without ever paying a cent in taxes. Let's look at the same situation as before, but instead of selling those buildings for 60 million, the real estate developer holds on to them till they're worth 200 million. Then he dies. His estate will pay some estate tax, but his heirs will inherit all that property at a new basis. If they sell it before it gains any more value, they will pay no taxes on all of those gains.
So let's just stop and think about this for a second. On one side, you have a wealthy heir who has never worked, never contributed anything to society, who inherited hundreds of millions of dollars worth of property and contributed nothing in taxes to the country. Nothing to build our roads, nothing to keep our water clean, nothing to keep us safe. And then on the other side are the workharts who go to work, pay their taxes, and do their part for the country every single day.
Between 1/3 and 1/2 of all the wealth in America is inherited. Many of the richest people in America are not rich because they did something to earn it. They're rich because their parents or their grandparents or their parents' grandparents did something to earn it. There's nothing wrong with inheriting money, of course, but there's no reason at all why people whose income is from inheritances should be taxed differently than people who have other kinds of income.
All right, so we've talked a little bit about personal taxes. Now let's turn to corporations.
In 2018, if you ordered a box of toothpicks from Amazon, you paid more for your delivery than Amazon paid in taxes, federal taxes that year. If you watched a single movie on Netflix, you paid more for your subscription than Netflix paid in federal taxes in 2018. And if you filled up your car once, you paid more than Chevron paid in federal taxes in 2018. Morris, can you explain how this happens?
Well, there are a lot of ways how this can happen, One of the main ones is the new federal tax code allows companies to pretend they do business in one place, even when they really make money someplace else. Let's take a company like Starbucks, for example. Let's say Starbucks has thousands of stores in the United States and a few dozen stores in Ireland. You'd expect them to pay a lot of taxes in the US and much less tax in Ireland. That would make sense, but that is not the way it works. Most large companies have what's called intellectual property, a trademark or a patent, for example. Unlike real property, land or buildings, intellectual property can be transferred to another country as quickly as a smart lawyer can type send on an email. Picture that Starbucks logo. That lawyer can transfer ownership of the logo to Starbucks of Ireland, who would then legally own the logo. In order to use the logo, Starbucks of the US would transfer royalty payments to Starbucks of Ireland. The company can make the royalty payments whatever they want. If they make the payments big enough, the company will show all of its profits in Ireland, even though they sold exponentially more coffee in the United States. Using this and other tricks, 91 of the Fortune 500 companies paid zero federal taxes in 2018, zero. So here we are again, with the workhards holding up their end of the bargain and everyone else shirking their responsibilities.
The new Republican tax code also lets some corporations pay only 10.5% of the money they earn overseas. That's half the current corporate tax rate of 21%. And companies can get a big tax cut for all of the factories and equipment they own in other countries. The more factories a company has overseas, the more it can cut out of its US tax bill. No wonder we're losing so many jobs from this country.
Now, rich people and CEOs love pretending there are good reasons why they should get to skip out on taxes. And one of their favorite reasons is that they're job creators. Ooh, job creators, like they're little magicians who create jobs out of thin air just by waving a little wand. Well, I'm a businesswoman, I've got news for you. I'm not a job creator. Sure, business people like me, we start companies, we hire employees, but my employees didn't have jobs because of my benevolence or genius. They had jobs because people needed the marketing software I created. People will have jobs making software and selling software solutions even if I die. Because if people really want marketing technology, another entrepreneur will come along and organize a company to fulfill that demand. Trust me, 5 others already have.
In the lead up to the Republican rewrite of the federal tax code, there were a lot of CEOs pushing for a lower corporate tax rate. They said they would use that tax cut to create jobs. They even launched a big job creators bus tour that went all over the country. The CEO of AT&T, Randall Stephenson, was one of the biggest cheerleaders for corporate tax cuts. He was on TV constantly, insisting the correlation between tax cuts and job creation was very, very tight, and promising that corporations hired tons of people if only they weren't burdened by having to pay their taxes. Now, keep in mind, corporations only pay taxes on profits. Profits are calculated after subtracting expenses like payroll. So Mr. Stevenson's claim doesn't even make sense on its face. But be that as it may, maybe he was just confused. Maybe he really thought he would hire people if the corporate tax rate was just a little lower.
Morris, I have to tell you, I just don't think so. Because you see, from 2008 to 2015, AT&T paid an effective corporate tax rate of 8%. That was significantly below the standard corporate rate at the time of 35%. According to Mr. Stevenson, with such low taxes, the company probably hired tons of people. Nope. During that period, AT&T cut 80,000 jobs. And with their tax savings and the savings from the layoff, they bought back $34 billion of AT&T stock, increasing the net worth of executives like Mr. Stevenson quite a bit. Since the new tax code went into effect, AT&T has cut an additional 40,000 jobs. And last year, it paid Randall Stevenson $32 million.
Erica just mentioned stock buybacks. For those of you who are unfamiliar with that term, a stock buyback is when a company uses some of its profits to buy up its own stock, making the remaining stock more valuable. This doesn't change the company's long-term financial health or create jobs, but it does make people who are paid in stock options, like millionaire CEOs, a lot of money. In 2017, lots of CEOs said they would use corporate tax cuts to hire more people, but that mostly wasn't true. Instead, many of them used the tax cut to buy back their own stock and make their executives even richer. The year after the rewrite of the federal tax code, corporate stock buybacks reached an all-time high of almost $1 trillion.
So business people like Kristen don't create jobs, corporate tax cuts don't create jobs, and stock buybacks really don't create jobs. What about just regular investors, people like me who invest money in the stock market? We pay half the tax rates of people who actually work for a living. Lawmakers justify that lower tax rate by saying that we are job creators and insisting that if investors' taxes are raised, they won't invest anymore. So are investors in the stock market job creators? No, but let me explain. Apple, for example, employs thousands of people who make computers and iPhones. I'm an investor in Apple. I have hundreds of thousands of dollars invested in Apple stock. The people who work at Apple have jobs because of the millions of people who want to buy iPhones, not because of investors like me. None of the money I spent buying Apple stock even went to Apple. It went to other investors who were selling their stock that day. And to be clear, investors are not going anywhere, regardless of the tax rate. The alternative to investing is sticking your money in a mattress. Last I checked, mattresses do not pay high returns. Any reasonable person would rather make something and pay taxes on it instead of not paying any taxes at all because they didn't make any money.
Right, but let's leave regular stock market investors aside for the second and look at private equity. Private equity funds actively buy and sell entire companies. Their investors get the special investor tax rate, which is about half the rate of normal people. And even the people who work managing the fund, but who have none of their own capital at risk, they also get the special half off tax rate. Morris, are they job creators?
Not even close. Look at this example. 2004, private equity firms took over Toys R Us. Over the years, the fund managers loved to say they saved the company and created 62,000 jobs in the process. Did they? Well, prior to the private equity takeover, at its peak, Toys R Us had 97,000 jobs. The company was in good financial shape with earnings of $252 million, cash on hand of over $2 billion. By the time they were done with the company, these private equity job creators had shut down all of its 735 United States stores and loaded its once positive balance sheet with $8 billion in debt. The investors, they made $470 million, but they destroyed a viable company and cost nearly 100,000 people their jobs. And they paid half the tax rate on that money as people who actually work for a living.
So let's see if I got this right. The new federal tax code makes it easier for corporations to skip out on taxes. It gives an advantage to people who already have money or inherit money over people who work for a living. And as you get richer and richer, there are more ways of getting out of paying taxes. Morris, tell me it isn't true.
Well, it's true. And the result of all that is that our country is more unequal than it has been in 100 years. The top 1% own 40% of all the wealth in this country. Since 1990, their wealth has tripled. The bottom half of our people have seen no wealth increase at all.
It's like some sick game of economic Jenga where we just keep on taking money from the people at the bottom and in the middle and giving it to the people at the very top. And it's destabilizing the whole country.
Yes, people are marching in the streets. They may have different reasons for protesting, but our citizens just cannot take it anymore. They're sick of seeing a few ridiculously rich people get everything, while millions of people are being treated as second-class citizens. Regular working people pay twice the tax rate that I pay. So even if you have the same income that I do, you end every year further worse off.
In America today, deaths of despair, deaths from alcohol, suicide, and drugs, are at their highest level ever recorded. 2.5 million people are addicted to opioids. And for the first time in our country, life expectancy is going down for some segments of our population. With COVID, things have gotten even worse. Millions of people are unemployed. Businesses across the country have shuttered, some of them permanently. But if you looked at the stock market, you would have no idea how bad things are for most working people. And here's a troubling fact. In the first 6 months of the pandemic, when over 220,000 people died, the wealth of US billionaires increased almost $1 trillion.
So none of this just happened. Over time, in a variety of ways, a relatively small group of people manipulated the tax code in order to structure the economy so that it delivered results just for them that were great for them, but really, really bad for everybody else. These people actually want to live in a country with a very small number of rich people, millions and millions of poor people, and no middle class. It doesn't make any sense to me why someone would want to live that way, but you can't escape from the structure that they have put in place in our society. But we can fix all of this with your help. If Americans are paying attention, they can have the kind of tax code they deserve, regardless of who's in charge. And so, if you want to learn more and learn how to unrig the economy, tax the rich, and save America, please go to taxtherich.com. And now we'll turn to some questions with the audience that y'all can just enter in your chat, and we'll have some discussion and Q&A. Thank you, everyone, for watching our presentation. All right, so let's go to questions now. Let's see, Q&A. All right, question for Chuck or the panel. If you tax the rich, they have enough resources to create shell companies in Grand Cayman and create pass-through corporations that that anonymizes or makes anonymous the in person. How do you pierce the corporate veil and tax the rich fairly?
Well, it's a really important question because the wealthiest 1/10 of 1% they have enough wealth that they can hire, kind of the wealth defense industry, tax attorneys, accountants, wealth managers to sort of help them use a whole variety of tools to hide their money. So the questioner asked, but the offshore system, trusts, dynastic trusts that take wealth and put it outside of reach of taxation for centuries. So there are two things that I think are most key. One is transparency. We should eliminate this idea that corporations that are completely anonymous and that people can create these shell companies. And the other is that there are certain trusts that have been created that are just simply for the purpose of tax avoidance and other loopholes. Those should be just shut down. It is possible to do that. And, but it requires an IRS that has the capacity to both enforce and it requires legislators who are willing to close down these hidden wealth escape hatches that the super rich use.
Great. Michael Maturo says, thanks for calling out the privileged for being selfish, Kristen. Michael, I think she actually used the word greedy bastards, but we'll stick with selfish.
I'm well known for cursing. I definitely say greedy bastards.
So, Kristen, you've seen both sides of this. Why are more people in your class not aware of their privilege and willing to do something to level the playing field?
I think you just get caught up in, the money-making process. I mean, I think, for years when I was living in Los Angeles and running my businesses, I had money that I had never had before in my life. And so you kind of get caught up in things and buying things. And then at some point, I think you get to a place in life where that all becomes less important and you realize the gross disparity and the social issues that it's causing. And I think if you're in the high net worth segment, you're a wealthy individual, understanding how that wealth has a profound impact on people in lower and middle class households is really, really important to understand. And it's, we mentioned this in the presentation, but it is destabilizing the country for sure.
And don't we need to improve enforcement? We have a question. What about rich people who just decide they're not going to pay what they already owe? Morris.
Well, yes. I mean, we do have to improve enforcement. I think that, and part of the problem is people essentially stealing, committing crimes and not paying their taxes. And there's been people doing that since the time of George Washington. There are now, and there will be in the future, regardless of what the laws are. So obviously, yes, we need law enforcement to enforce whatever the laws happen to be at any given time. I think that unfortunately, the rich people who evade their taxes have been very successful when they go to their Congress people and say, defund the police, because they actually have defunded the part of the IRS that audits the very rich people quite a lot. And we have to reverse that trend and change the IRS so its focus is on auditing the very wealthy people who have lots of income and less so on investigating the very poor people who are trying to get by in their earned income tax credit, which is where their current audit focus seems to be.
There was one research that project that showed that we were going to miss $5 trillion of income in the next 10 years from the wealthiest people in the country skipping out, breaking the law, and not being caught. So we've got a question from Jake. And maybe, Morris, I'll maybe kick this one to you also. Can you speak about the dynamics in New York State where the legislature would tax the rich, but the governor will not? And we'll just say for emphasis on this point that Governor Cuomo declined to tax billionaires during a global pandemic and instead cut $600 million from Medicaid. Morris, thoughts on that?
Well, yeah, I happen to be living here in New York State and New York City. And yes, I am disappointed with our governor. His position is essentially that New York State gets about 40% of the tax revenue from the top 100 highest earning people in the state. And that if only a few of them move away, that would seriously undermine the tax revenue of the state, for years to go in the future. But personally, I believe we're actually more at risk if we reduce the services, the education, the health services that make New York, New York. People are moving into New York from all over the world to create businesses and do things. And they're moving here not because New York is a low tax state. They're moving here because New York has the financial resources to make New York, New York, to provide the education and all the other services that allow them to start businesses, to make employees want to move to New York, to, the old saying, if you can make it in New York, you can make it anywhere. And that's still true. And so I think we have to continue to do that and not be short-sighted and worry about, and we have to not allow our state to deteriorate. We have to remember that we are New York.
We did write one letter at some point that if millionaires were that upset, Connecticut could have them. So I think that could be part of it. Mark Ernst is interested to know our thoughts on how these issues get solved. So should we prioritize 1, closing the tax gap through IRS enforcement funding, 2, changing political funding, 3, changing the tax code, or 4, something else? Kristen.
Well, certainly we need to prioritize changing the tax code. I think we're all in favor of that. I think that a lot of people, when they hear this presentation, they think like, what can I do as an individual? And I think that, looking at the records of politicians that you're voting for and making sure that you understand their voting history, how they think about income equality, how they think about the tax code, and where their campaign finance money is coming from is super, super important in understanding how you personally can help, solve this issue.
Any other thoughts on that one?
I think the IRS enforcement issue is not the major issue.
Mm-hmm.
The things that we were talking about in our presentation are all things that are perfectly legal. And so that's sort of where we are focusing, is changing the laws about how much taxes people have to pay. Frankly, a lot of people do obey the law and pay the tax they're required to pay. The problem is they're not required to pay nearly as much taxes as a percentage of their income than people who actually work for a living. And I think that's the major problem.
One thing to add to this, people always talk about simplifying the tax code, and by that they tend to mean reducing the number of tax brackets. A tax bracket is not particularly complicated. There should be dozens of tax brackets. Somebody who makes $10 million a year, even $2 million a year, has basically nothing in common with somebody who makes $622,000. So why wouldn't we have a tax bracket at 1 million, 2 million, 5 million, 10 million? That just seems like one of the most obvious pieces. But really, we need to do all of those things. So
I think too, Erica, like that, it's the education around this, how simple the tax brackets really are, is super important. And I think that's one thing a lot of people get out of these road shows, is really truly seeing how easy it is to understand the tax brackets. Like, it's not this, you don't have to be an accountant or somebody that works on Wall Street to understand how it works.
Yeah, and I was just going to say, what makes the tax code complicated is all the things that the top 1/10 of 1% do, all the games and loopholes and, ways of moving money around and ways of gaming the system that are put into the tax code by the wealth defense industry. And that's what's making it complicated. And in the 1950s, under, the socialist presidency of Dwight Eisenhower, there were probably 15 additional top rates above, what today would be the equivalent of $500,000 in income. There was a whole staircase of progressive rates. And the estate tax should have the same thing. We shouldn't have an estate tax where you pay the same rate whether you have 20 million or 20 billion. It should be progressively stepped up. That's what helps slow that concentration of wealth and power.
Yes.
Blake Jones says, great presentation. Thanks, Blake. Regarding the estate tax, there's an argument that I often hear from friends who want it to be lower. And it goes like this: if my ancestor earned money in the past and paid taxes on it when they earned it, why should it be taxed again when this money gets passed on to their children and grandchildren? And a related question underneath: how do you make the argument that inheritance tax is not a form of double taxation? Chuck.
I was going to say that's the idea that this wealth has been taxed before is largely a myth. Probably 2/3 of the wealth covered by an estate tax are appreciated assets that have never been subject to any tax. The share of Berkshire Hathaway you bought in 1981, and now it's worth whatever. That's never been subject to a tax. So the estate tax is actually a way to capture some of those greatly appreciated gains. But it has been an uphill battle to defend the estate tax, right? I mean, 20 years ago, the anti-tax people called it the death tax. They waged a whole campaign. They almost got rid of it. They've succeeded in raising the exemptions to the point where it's like $22 million for a couple where it starts. And they've made it more porous with all these trusts and grats and tax loopholes that people use. So there is a pretty good case to be made for shifting the tax from the estate to the inheritors, to the beneficiaries, and taxing inheritances as a form of income as it flows to, the heirs. Right now, if I were to find $1 million in a bag on the street, I would technically have to report that and pay taxes on it. Or if I won the lottery, but if I inherit money from my aunt, I don't have to pay any taxes on that. And that's how warped the system is. So we think that it might be more defensible and politically sustainable if the tax was on the recipients, on the lucky beneficiaries of picking the right parents.
Yeah, if you look at the list of the richest billionaires in the country, about half of them at the top are the heirs of either Sam Walton or Forrest Mars, or a few other rich people. They were never subject to double taxation because when Walton started Walmart, it was worth zero before he started it. It was worth billions and billions of dollars when his heirs inherited it. But he never paid tax on that because he never sold it while he was alive. So that stepped up basis I was talking to you about is what his heirs can take advantage of. Even when they sell the stock, or whether they do or not, they never pay tax on the increase in value on those billions and billions of dollars that Sam Walton made originally. I mean, he did pay tax on his salary, but that was a tiny fraction of a percent of the wealth he created for his family as Walmart increased in value from zero the day he started it to the tens of billions of dollars it was worth, when he deceased.
All right, Don Hart and I don't know if we know the answer to this, Don. Does anyone have an idea how much our tax system is aiding and abetting? Oops, I lost my question. Is aiding and abetting crimes and corruption in other countries as the rule of law in the U.S. helps protect their loot? I don't know if we know the answer. Chuck, do you know?
One thing, which is that the United States is becoming the center of global kleptocratic capital, meaning that if you are a drug dealer, if you've gained your money illicitly or you've stolen it from the people of your country, where do you take it? right now, the best place to take it is the United States, because you can get a shell company in Delaware or Nevada. You can get a dynasty trust in South Dakota where you'll never have to divulge your identity. You can play all those games and shelter money in assets in the United States that do not have to disclose who the real owners are. So I would say we are, and the Tax Justice Network declared the United States is the #2 now biggest tax haven in the country, in the world, after the Cayman Islands. So that's not something we want to be proud of. And that's, again, something we can fix. But we're aiding the theft of other countries. Dictators steal their money from their people, and where do they bring it? They bring it to the United States. They buy real estate in New York City.
Chuck, you said we're the second biggest. What? You kind of broke up.
The United States is now the second biggest offshore tax haven in the world. We used to be Switzerland, but now we're worse than Switzerland. The Cayman Islands, the United States, 1 and 2 worst tax havens. Worst. That's the place where people take their stolen loot and hide it.
That's neat. Welcome to the US of A. All right, let's see. Do you think the powerful, wealthy are more opposed? This is a great question from Sandra Rothberg. Do you think the powerful, wealthy people are more opposed to fair corporate taxes or fair estate income taxes? Sandra, I think they hate both of them. But if we are going to get people like you as allies in the fight for tax fairness, which issue is more likely to get traction? I don't think either one of them is going to get traction with the rich people. Randall Stevenson is out there with lying, going on TV. Look at what this corporate tax cut's going to do. It's just a big fat lie. What Morris said earlier, it doesn't even make logical sense. They don't even pay taxes. They pay taxes on profit. So he's just saying something that is not true. I can't imagine we would get him as an ally in the estate tax either. So we might just go it alone, Sandra.
The Republicans believe that profits are fixed. And so you have your revenue and you have your expenses, and you subtract expenses from revenue, and that's profit. And so if profits were fixed, when you lowered one expense like taxes, you would raise another expense like payroll. But you think about it, if one of your expenses goes down, like say groceries are on sale, that doesn't mean that you think of something that, what shall I spend more money on? Oh, I should pay my dry cleaner more. No, if your expenses go down, you have more money that week. So it's kind of a ridiculous argument on its face from, a bunch of 20-something-year-old congressional staffers who've never actually met a payroll.
Well, and I'll also say, as someone who ran 3 businesses with many employees, our profits went up. It just went down to our bottom line because all we were, as the founders, we were looking at improving our valuation when we went to sell. So the more profitable the company is, the higher our valuation and the more money I'm going to make on the exit. It certainly didn't compel me to hire more people.
All right, so we'll do one last question because the family farm question is a really good one. Priscilla McKenzie says, I live in farm country, mid-level, but still multi-million-dollar farmers. Saying taxing at this level would make them break up their family farm in order to pay taxes at the time of death. And they say that this keeps them from competing with mega food producers. How is that true, Morris?
Well, yes, it's difficult to be a farmer in the United States, but the federal estate tax only starts at $22 million for a couple. Most farmers I know are married, or at least were at some time in their lives. So I don't think there are that many small family farms that are worth $22 million. There are some that are jointly owned by a whole series of cousins and relatives. And yes, we can have different rules for family farms that are owned by a whole series of people and one person dies. But I don't think that it's not family farms that we're concerned about. It's the people people like who I mentioned before, the Walmart heirs who have 30 and 40 and $50 billion stock portfolios. Those are the people we don't think are paying their fair share of taxes. It's not the guys with a few thousand acres of soybeans in central Iowa that I'm truly concerned about.
I'd just say, Priscilla, that if you have a long memory, if you go back 30, 40 years, there were cases where The 1970s estate tax was quite low, and it did affect closely held businesses and small farms. But now at this point, as Morris says, $22 million wealth exemption. And within the estate tax law, there are still all these carve outs for farms and small businesses. They have 14 years to pay the tax should that tax come to be. But the reality is now virtually no significant small farms and even medium-sized farms are subject to the estate tax. But the opponents of the estate tax continue to use that as their talking point. They will never talk about Paris Hilton and all the wealthy heirs and heiresses who've actually benefited from estate tax, making the estate tax weaker. They will always sort of be pointing to these farmers. And as Morris says, that's not really the point here, is to slow dynastic wealth dynasties from forming an anti-democratic, amounts of power. And that's really the focus of what an inheritance tax or an estate tax should be.
And I'll just say also, Christine Nome, who's now the governor of either North or South Dakota, I always forget. She has this big yip about how her poor family farm, and then some journalists did some digging. It was basically a bunch of nonsense. I mean, so every time somebody stands up and says their family farm got hit, if they're governor of one of the Dakotas, at least, question whether they're telling the truth or not.
Christine Nome actually misrepresented. She says that her family had to pay an estate tax when her father died in a tragic farm accident. Google Christine Nome estate tax, Chuck Collins, and you'll see a whole expose we did on the fact that Christine Nome maybe paid some state estate tax, but her mother is still alive and could have took the spousal exemption. So that tax was never paid, but to the federal government.
So if you're from North Dakota on this call, you should call your governor and ask her to be a little more truthful.
South Dakota, yeah.
All right, so y'all, it's 4 o'clock. I want to just give each millionaire a chance to wrap, and then remind everybody to go to taxtherich.com. If you didn't understand anything in the presentation, let us know. If you see something that you want us to add to the presentation, let us know. And if you would like to host one of these presentations, please let us know. We want to get our message out to as many people as possible. So let's close this out. Morris, you want to? We'll just go around the circle. Morris first.
Sure. I just want to thank everyone for attending our presentation and sharing my concern that we need to change the course of our nation before it ends up falling apart. Thank you.
Chuck.
Thanks to Senator Schumer and for all these great questions. I clearly we could have stayed together for another hour to talk about this. And I just think it's important to remember that when the reason Donald Trump only paid $750 in taxes is because we have a two-tier tax system. We have a tax system for the privileged, people in the top 0.1% who can hire the help to game the system. And then there's the tax system for everyone else. And that's really fundamentally what we have to change.
Kristen?
Yeah, I hope for everyone that listened in today that this was, helpful and informative about really understanding the tax code. I think there's a misnomer that it's super complicated and then an ordinary individual can't grasp it. Everyone can. And, the best way to make changes to the tax code is to really get informed about how your politicians and state leaders, think about taxation and make sure that's an important component of how you vote.
Y'all, thanks so much. We so appreciate it. We really are glad y'all could all be here, and have a fabulous afternoon. Happy weekend. Thanks.
Thanks, everyone.
Thanks, Erica. Thanks, everybody.